In the world of finance, there is a massive shift happening right now. The old guard is being challenged, and three digital-first giants are locked in this fierce battle, not just for market share, but for the one thing that really matters, your wallet. Chances are you have at least one of these apps on your phone right now. But behind those slick interfaces and the endless push notifications, each of these companies is playing a completely different game. Each one has a totally unique vision for the future of money. And look, understanding their strategies isn't just for investors or stock market nerds. It's absolutely crucial for anyone who's just trying to navigate this new landscape of personal finance. This is the story of three titans fighting for total control of your financial life. So let's meet our contenders. First up, we've got Robinhood, the populist challenger that's trying to become the only financial app you'll ever need. Then there's SoFi, the methodical strategist, building a modern, all-in-one digital bank. And finally, Coinbase, the ambitious architect, aiming to build the very foundation of the new on-chain economy. Okay, let's kick things off with the one that really started this whole commission-free revolution. Robinhood's goal, it's always been aggressive, to be the one-stop shop, the financial super app for a whole new generation. So they've been around since 2013, and in that time, they've pulled in a staggering 26 million funded accounts. How? By relentlessly targeting a younger demographic. I mean, a massive 75% of their users are under the age of 44, all drawn in by that simple, powerful promise of mobile-first, commission-free trading. But how does free actually work? Okay, let's get into this. The engine behind Robinhood's whole model is something called payment for order flow, or PFOF. So instead of charging you a commission, Robinhood gets paid by these huge market-making firms for sending your trades to them. It's a bit controversial, for sure, but it's a highly effective way to fund that free trading experience. And yeah, that business model, combined with its kind of gamified interface, has led to this stubborn perception, captured perfectly by this Reddit user, that Robinhood really encourages high-frequency, speculative behavior. You know, something that feels a lot more like gambling than long-term investing. But here's the thing. Robinhood is aggressively, and I mean aggressively, trying to shed that image. Their strategy is crystal clear. Expand relentlessly beyond just trading stocks to capture every single dollar in a user's financial life. They've rolled out their gold subscription, a high-yield savings account, credit cards, even retirement accounts. And they're not stopping there. They're pushing into the future with their own blockchain, the Robinhood chain, and this fascinating new feature, prediction markets, where you can literally wager on the outcome of real-world events. And you know what? That big bet on new features is really starting to pay off, especially with those prediction markets. In a super short time, users have traded over 4 billion, that's billion with a B, event contracts. And to give you a sense of just how explosive this growth is, half of that, a full 2 billion contracts, happened in the third quarter alone. This isn't just some side project. It's a really clever move that taps into that same speculative energy that drove the meme stock craze, but it channels it into a brand new and pretty significant revenue stream. Now, while Robinhood is chasing all that high-frequency activity, our next contender is playing a very different game. SoFi, or social finance, is way less about the thrill of the trade and much more about building a stable, long-term financial relationship with you. SoFi's journey has been super methodical. It started back in 2011 at Stanford, and they were laser-focused on one thing, refinancing student loans. From there, they strategically expanded into personal and home loans, and then they added investing. But the real game changer, that came in 2022 when they got a national bank charter, which transformed them from just another fintech lender into a legitimate full-service digital bank. So today, SoFi's ecosystem is just incredibly broad. It covers all the major lending you can think of, offers really competitive banking products, and has a full suite of investing and insurance options. And get this, through its Galileo platform, it even provides the back-end technology for other financial companies. That's another powerful revenue stream right there. So here it is, the crucial point. Robinhood's entire business lives and dies by transaction volume. The more you trade, the more money they make. Simple. SoFi, on the other hand, profits from long-term relationships. Its revenue comes from interest on loans and deposits, a much more traditional banking model, just wrapped in a really slick modern tech package. And that brings us to our third contender, Coinbase. Now, while Robinhood and SoFi are kind of adapting to crypto, Coinbase was born in it, and its ambition now is way bigger than just being a place to buy some Bitcoin. See, Coinbase is going through this fundamental pivot. It's moving from being just a consumer-facing retail exchange to becoming the core infrastructure provider for the entire on-chain economy. It's a huge B2B, a business-to-business play. And this right here perfectly illustrates their goal. They want to be the AWS of crypto. Think about it. Just like Amazon Web Services provides the cloud computing backbone for a huge chunk of the internet, Coinbase wants to provide all the essential tools and services for any company that wants to operate in the crypto world. So here's how their strategy works. First, they build the best-in-class tools for things like custody and trading. Then they package it all up into a crypto-as-a-service offering. This allows traditional firms, like a Fidelity, to just plug into Coinbase's backend and offer crypto products to their own customers, instantly. And finally, their own blockchain Base serves as the proving ground and the retail hub for this whole new on-chain ecosystem. So there you have it, the super app, the digital bank, and the crypto architect. Each one is powerful, but they all serve very different needs. So the question isn't really who is best, but who is best for you. Let's break it down based on what kind of financial user you actually are. Okay, if you're an active trader, you love stocks, options, and making frequent moves, then Robinhood's sleek interface and commission-free model is literally built for you. But if you're a long-term saver looking for one place to manage your loans, your savings, your retirement, then SoFi's all-in-one digital bank is the clear choice, and it comes with the security of a real bank charter. And finally, if you're a crypto pioneer, someone who wants the deepest possible access to digital assets, staking, and on-chain protocols, then Coinbase offers unparalleled depth with over 240 assets and institutional-grade tools. So at the end of the day, you gotta realize this isn't a simple race with one winner. These companies are on totally different missions. Robinhood wants to be the interface for your daily financial actions. SoFi wants to be the foundation for your long-term financial health, and Coinbase wants to be the infrastructure for an entirely new financial system. And all of that leaves us with the big question. As these titans battle it out, will one super app eventually win and just consolidate all of your financial needs? Or is the future of finance one where we use each of these powerful, specialized tools for what they do best? The battle for your wallet is on, and how it all plays out is going to define the next decade of money,